Hi there, welcome to Grain TV. I'm Kevin McNew. It's Friday, November 18th, a up day for day 2 of this rally. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn gaining 4 cents a bushel, beans up 5.5, and wheat in Chicago up 4, although at 1 point off or up as much as 7. So really it was just kind of a limited rally here today. We did see some strength on the open. Got us higher, but overall just very little follow through. I think there was probably a little bit of active farmer selling. We saw basis levels start to weaken a little bit from some of the key players in the market today. News out today was kind of limited. There was some export deals though. USDA announced another flash sale to China, this time 165,000 metric tons for the week. Overall, that totals up to 865,000 that we did in business for soybeans, so it was a relatively good week in terms of soybean deals. Let's take a look at basis levels and where we traded for the last week. Overall, we saw more strength in corn and soybean basis around the country. Overall, corn basis is up about 1.5 pennies, beans up about 2.5 cents. Most of the strength continues to be on the eastern corn belt. We see states like Indiana, Ohio seeing more strength, especially in corn, going on right now versus the western corn belt, where we still have a lot of excess supplies. We've got piling going on at elevators. Overall, also the ethanol plants and the soybean crushers were higher compared to river terminals this week, seeing more strength from end users who have mostly been lagging the basis recovery because river terminals have been so hot thanks to weaker barge rates. But as we look ahead, there are some lingering issues here. The US dollar continuing to be on a torrid pace to 14-year highs. We saw strength again yet today in the US dollar. We are up 0.3% today after yesterday's rally, and of course, going all the way back to Trump's election, we are up nearly 3%. So overall, the grains have held up fairly well, but I'm not sure how long that can persist. We seem to shrug off this strength in the US dollar. But when we look at some of the key players in agriculture, Mexico's peso off sharply against the US dollar. Brazil seeing its own problems in its real in the last week, unrelated to Trump and the election there. So overall, these are not good signs for our competitiveness in world markets. If you add on top of that more clouding uncertainty related to China, China is obviously in the crosshairs of President Trump, or at least he said that in his election. And there was discussion yesterday by China's state-run newspaper, the Global Times, that any sort of trade war or trade measures levied on China would be met with a tit-for-tat type of strategy. And obviously they are major buyers of some of our products, iPhones, Boeing airplanes, but of course in our case we worry about agriculture, and they are a huge buyer of US soybeans. So we still have 7.2 million metric tons of soybeans that have been committed by China that have not been shipped. So we have that at risk, as well as also any sort of potential new business that comes down the pipe. So right now it's still early to call. My own personal guess is that when it comes to it, President-elect Trump will be more pragmatic about his policy decisions. And so, the likelihood of a trade war with China seems remote, but it is certainly a wild card that is out there. Add on top of that, big South American crop potential coming down the road. Obviously, they're early in the growing season, but they are off to a relatively good start overall in Brazil and in Argentina, with ample rain in most of those regions. And you add on to that the potential for 5 million more acres of soybeans, according to Informa, and even many other analysts saying 3 to 4 million acres more. So overall, it looks like a big push higher in 2017 soybean acres for the U.S., which would of course spell problems for growing soybean carryout in 2017. If we look at November 17 beans, we've traded on a weekly chart here from 870 up to 1020. The good news is, if you haven't done anything, there's still a chance to lock in somewhere around $10, closing around $9.95 today. So $10 is still in the wheelhouse for new crop beans you haven't even put in the ground. I think this is probably a good time to be looking at that as a possibility, given a number of major threats to the soybean market. Trade war with China, South American crop production looking very favorable. Their currencies are weakening relative to the US dollar. All these things are sort of stacking up against any sort of major recovery in soybeans going forward. If you're interested in timing and market timing issues, we have our technical alerts platform that's available for many of our trading clients. And so as a Grain Edge trading client, you can log in and basically see in real time what our technical alerts are saying about where the market direction can be heading. This is a very valuable tool because it gives you some guidance on where to be looking for the market, either long or short, and also gives you probabilistic forecasts based on historical trading patterns. So it's a very valuable tool. Go to grainedge.com, learn more about it, and get signed up for a demo of our technical alerts and our trading platform to see it in real time. That's all we've got. Have a great weekend, and we will see you on Monday.